over 2,885. It sold off to just a little bit negative. Ended up closing down the day up about $8. So another record high close, record high weekly close. I mean, gold's going up, but it would have been up a lot more if we didn't get this bad inflation news. But again, bad inflation news is good for gold. It's not bad for gold, but the traders still react to this news. Whenever they see hotter than expected inflation, the reaction is, okay, the Fed is going to have to delay the rate cuts. Delaying the rate cuts is programmed in the algorithms. Anything that delays the rate cuts is good for the dollar and bad for gold. So the dollar rallied and gold sold off.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Are an example of garbage in, garbage out, because whoever's programming them doesn't understand what's going on. Yes, inflation is worse than expected because the Fed is behind the curve. In fact, they've surrendered in the inflation war. They're wrong. Higher inflation just shows that the Fed lost. The Fed is wrong, right? The Fed keeps saying inflation is going to go down, but the data keeps proving that it's going in the other direction. And what's significant is not that the Fed is going to delay the cuts. What's significant is that they're not hiking. They should be hiking. The data argues for higher interest rates, yet they won't raise rates. There's no way they're going to raise rates. And of course, when Powell's term is over, whoever Trump nominates, right, there's no way that guy's going to raise rates, right? Because, we need lower rates. And so inflation that is rising, that the Fed refuses to fight because it can't fight it, is bullish for gold. And it's bearish for the dollar. Now, gold's going to go up anyway because it's just going to keep on going up, right? The central banks are going to keep on buying. I mentioned on my gold, promotion that I did for Schiff Gold on Tuesday, and I haven't checked today, but as of when I checked on Tuesday, there wasn't a single day in 2025 where there was net inflows into GLD. Every day, as gold was making record highs and rallying, Americans were selling. And not only are they selling their ETFs, they're selling their physical gold. Redemptions are way up at Schiff Gold. That's what's keeping us going. I mean, yeah, some people are buying, but we're getting a lot of people selling. And I checked around. The same thing is happening with gold firms all around the country. Americans are selling their gold. I mean, what idiots, right? They should be buying, right? The central banks are buying. And I mentioned on that video that the delivery notices on the London Metal Exchange and the COMEX have shot up dramatically, meaning that people are taking delivery of these 100-ounce bars of gold. These are not mom and pop guys who are buying gold in 100-ounce bars. There's some sophisticated money alongside of central banks that are buying up all the gold they can get their hands on. Meanwhile, unsophisticated retail investors are selling their gold to buy Bitcoin or Bitcoin ETFs. Look, who do you think has got it right? These central banks or people who are trading on Robinhood apps, right? So this is the best contrarian indicator I've ever seen, that you've got all the smart money buying and all the dumb money selling. You got to be loading the boat on gold. You got to be loading the boat on these gold stocks. I mean, yeah, I think, they're up now about 20% this year. Gold's up about 9%, 10%, but they still haven't gotten back to their highs from October of last year, even though gold is 3% or so above those highs. So these things are a steal. People should be buying my gold fund, the Euro Pacific Gold Fund. I just think this is the greatest speculative trade I've seen. I think these stocks are going to explode. And nobody is there. Nobody is going along for the ride, which is perfect, right? We've got a bull market and no one's going to go along, right? The public is completely in the dark. They're missing out. The financial media is leading them astray by refusing to cover this, and instead nonstop coverage of fool's gold and no coverage of the real thing. They're missing what's going to be, I think, the biggest gold bull market in history. It's, as of now, it's the most unloved bull market in history. That will change. I don't think it's going to change at $3,000 gold. And I think we'll be there before the end of the month. We may be there before the end of next week. We get a lot of inflation numbers next week. I think they're going to be bad. So we'll see. I mean, gold could react negatively to that initially. We get CPI and PPI. But I don't think $3,000 gold will do it, but maybe 4,000 or 5,000 will. And I think we're going to be there relatively soon. We could be there in 2025.
In today's news recap, central banks' insatiable appetite for gold is firmly entrenched. Central banks have started the new year exactly as they ended 2024 by increasing their gold reserves. Krishan Gopal, senior analyst for EMEA at the World Gold Council, was active on social media Friday, documenting central banks' gold purchases last month. The day began early when Gopal noted that China once again increased its gold reserves in January, buying 5 tons of the precious metal. Analysts have been particularly focused on China. This marks the 3rd consecutive month that the People's Bank of China has increased its official gold reserves, following a 6-month pause after an 18-month buying spree. Last month's purchase helped lift gold reserves to 2,285 tons, Gopal said. Although China has significantly increased its gold holdings, the yellow metal still accounts for only about 5% of its total foreign reserves. Analysts suggest that there is ample room for China to raise its gold holdings to 10%, bringing it more in line with other developed market central banks. China wasn't the only country buying gold. Gopal noted that data from the National Bank of Poland shows it purchased 3 tons of gold in January. This lifts its total gold reserves to 451 tons, 26% higher than in January 2024 and 97% higher than in January 2023, Gopal said. Poland was the top gold buyer last year, with its national bank increasing reserves by 90 tons. Elsewhere in Europe, Gopal reported that the Czech National Bank also purchased 3 tons of gold in January. Its gold holdings now total 53 tons, 63% higher than at the end of January 2024, he said. Gold now also accounts for over 3% of total international reserves. Finally, Uzbekistan was the biggest gold buyer last month, with its central bank purchasing 8 tons of gold. Sovereign purchases dominated the gold market last year, with central banks collectively buying 1,045 tons of the precious metal, according to the World Gold Council's annual and 4th quarter trends report.
In the short run, we have a recession. I mean, a massive recession and a financial crisis. I mean, talk about you can't make an omelet without breaking a few eggs. We got to break all the eggs. And by the way, if you've seen egg prices lately, they are skyrocketing. Americans are probably going to have to stop eating eggs because they're not going to be able to afford them. But you have to have a painful recession to do what Trump wants to do. But no, Trump doesn't want a painful recession, not while he's president, because he doesn't want to accept responsibility, even if it's constructive, right? He wants to take credit for an immediate golden age that he has promised, but that he cannot deliver. It easily could be part of the process of the U.S. losing its reserve status for the dollar. It's why central banks are buying gold. And, by the way, I mentioned, China has about 770 billion of treasuries. Years ago, they had over $1 trillion when the U.S. national debt was much smaller than it is right now. So they've obviously made a decision to substantially reduce their treasuries as they're buying more and more gold. And who knows how much gold they actually have. My guess would be they're underestimating the size of their holdings, but they are continuing to buy. They may have taken a brief reprieve, but they're going to keep on buying gold, and 3,000 is not expensive for them. They probably still regard it as cheap, and they want to get rid of their dollars. I think they want to get rid of a lot of this dollar-denominated debt. They still have a lot of dollars to sell, which means they still have a lot of gold to buy. And at some point, when the public stops selling and then starts buying, they're going to have more competition, and prices are going a lot higher. So in the meantime, buy your gold now. Go to Schiff Gold. Silver is still on sale. In fact, silver got clobbered today. It was still positive on the week, but it got back below $32. It closed at 31.90-ish. On the week, gold was up 1.6%. Silver was up 1.7%, but it's still cheap. Gold stocks up about 4% on the week. They are still giving these stocks away. Again, go to Europac.com. Check out the Euro Pacific Gold Fund. If you're a speculator, I can't think of a better speculation right now than these gold mining stocks. We've got an excellent portfolio of junior miners, real juniors, not the fake juniors that you get in the GDXJ, but some real hidden gems. I think that Adrian has uncovered. We've built really strong positions, and I think when the public wakes up to the fact that this is a bull market in gold and maybe the mother of all bull markets, you're going to see a big rise, I think, in these gold mining stocks, and you want to get in there ahead of the crowd. So we're actually in worse shape. We don't have a pile of Japanese government bonds to sell. All we got is gold. I mean, I hope we don't sell our gold because we need that. Which, by the way, let me transition into from the sublime to the ridiculous, which is all the talk now about the U.S. establishing a sovereign wealth fund. I mean, are these guys serious? How can they even say this with a straight face? Now they're saying, well, Singapore has a sovereign wealth fund. Switzerland has a sovereign wealth fund. Norway has one. So why can't America? Well, there's a huge difference. These countries don't have any debt. They have surpluses. Yes, they have government debt, but their sovereign wealth funds, or in the case of Switzerland doesn't have a sovereign wealth fund, but the Swiss National Bank has a balance sheet that's almost $1 trillion. Their total national debt of the Swiss government is about 20% of that. So Switzerland has a huge surplus. They don't have a $36 trillion national debt. They have no national debt. They have national assets. They're creditors. They're not the world's biggest debtor like America. The same thing in Norway. Norway's sovereign wealth fund exceeds all the outstanding Norwegian government debt. Same thing in Singapore. They hardly have any debt, right? So these countries are creditors. Plus, they have trade surpluses. They're earning money. America is hemorrhaging red ink. How the hell can we have a sovereign debt fund, wealth fund when we're drowning in sovereign debt? We got to do something about our sovereign debt before we talk about sovereign wealth. I mean, where would the money come from to fund this sovereign wealth fund? We'd have to go deeper into debt. We'd have to borrow more money. So it's like a giant hedge fund. Yeah, let's take on leverage. Let's borrow a bunch of money and let the U.S. government figure out how to invest it. I mean, that's the last thing we want. I mean, first of all, I don't even like the concept of sovereign wealth funds. I don't think Singapore should have one, or they should just let the people invest their own money, right? If they have all this excess money, it just means the taxes are too high. Cut taxes. Let the people invest their own money. I mean, that's capitalism. Why would you be in favor of having the government take our money or borrow money and then pick winners and losers? That's the last thing you want in a free market. And of course, once the government has skin in the game, it's going to influence everything they do. They're going to try to pass legislation, taxes, regulation that favor the stocks that they bought at the expense of the ones that they don't. So the last thing you want is for the government to be owning stocks. And of course, look at Solyndra, right? That's the example of the type of thing the government wants to fund, right? The government puts all this money into it. They're talking about buying Bitcoin in there. What a ridiculous thing to do, right? Again, if people are dumb enough to buy Bitcoin with their own money, have at it, right? But we don't want the government buying it with taxpayer money. We don't want the government buying it with borrowed money.